Good morning, guys. Nice early bulletin today. So we have a little bit of a mixed picture in so much as the sentiment saying risk off slightly on the 24-hour change, but the technical risk calculation has improved. And we were actually come up quite a bit since Monday. We were really low on Monday, and that's come into calculation. It's calculated from these different instruments here, and it's calculating the change on the day and the change over the last 5 days. So we have a string of successive strong days, we're going to have a really good score. And it's looking possible that we're going to have a string, a 5-day sequential bullish performance on the indices. If we do, our points is going to really pump. And the most points that we can get is 100. We were at 89, I think, on Friday, and but we did dump quite a bit. So I was wondering whether or not, if we get really high, we could be looking to de-risk, to take some profit. If we get really low, we're looking for longs. Okay, so this is what I might be doing going forward, perhaps next week. If we get really high and we have a big dump, just look for buys, basically. We know at the big picture that it's risk on because the herd are short. However, this change in the 24-hour difference was quite notable. And I'll show you how that's calculated. So I'll get my RDP, get the FXCM, I'll bring that across. Now the thing is, with the indices that they're going long, so there's the change on our metric, okay? Like I was saying, here, that's telling us that they're going long, right? So for us, it's a sell on the 24-hour change, and so they've gone long. So we should be falling, but we have a very heavy macro day today because we've got the CPI. So we'll have to be a bit wary, and I'm going to be sitting on my hands and monitoring today. No trades at all. US 30, likewise, have gone long. So, there's that 24-hour change. We should be falling, but it just might want to grind higher, maybe. Maybe it might just be grinding higher up to the CPI. It just means that if we do come up higher, these late bulls will get paid, but it can happen. And then DAX, and then obviously what we can, we made a support. We really fell very heavily, and it sort of went sideways. And this is the thing, is that if you are caught off guard and you're undergoing a huge disgusting amount of drawdown, and then it goes sideways and then it falls, that's going to be pretty much like a nail in the coffin, where you think, right, sod this, I'm out. And then you think, oh my God, I just have to get out because it looks like it's going to fall. Like I said in yesterday's video, just do a little bit of TA, and we made a higher low. And that itself is a technical indication. So the thing is, when you're undergoing this huge loss, is that you're not thinking clearly and you're not looking at technicals or sentiment. You're just looking at your, basically you're looking at your account going to deep red, and you're looking at your margin most of the time. Retail traders are over leveraged with a small account. They should be having large accounts than they have, but they're using small accounts, and then they're basically just gambling. And so they're looking at their account going into red, and they're not thinking clearly. But we knew that was going to be a ruse, because I was saying panic stations, and we did. It broke that support, and for those guys, that was it. That was the nail in the coffin. So like I was saying into Telegram, what you want to be doing is marking these levels, and you're looking for a retest, right? And then you know where your stop is. All right, so you could have entered here at 15,545, 15,516. You could have probably put your stop a little bit lower, perhaps just here, and you're looking for maybe a 6R trade there, maybe 5R. And that's how you do it. So you're placing levels on your chart, you're looking for retests. So you wouldn't want to be opening here, because you would have undergone some drawdown. It would have been okay, but it's always better to get better entries. So be patient, and then you get a good entry. Now gold is going to do something very interesting, and I think we're going to get a retest of this support box, but I could be wrong. And I was thinking we might have like a wedge break, which I might be able to show you. The tools on here aren't that great, I can try. So something like this. Yeah, that's fine. Add line, and then something like this, right? So we're going to come down and test that potentially. However, the thing is, if we have a technical break, it will be a buy because the big picture is that we are a buy here. So if we do get a break, might come into support for a bounce. And now the thing is, it will make a harmonic, which then it gets a little bit complex, a bit technical. And then we're going to make an XAB triangle, right? So then C could be anywhere, but it will be buy here because it's a bullish harmonic. Okay, so if we do fall, it'll be a buy. However, it looks like we might not get the technical break because of the sentiment. We made the buy. In fact, we can make a box actually, and where's the box? Here. So that's it really. So that's me done for the day. I'll be back later. We've got a problem with this sheet because we're using the MyFXbook API, and so we should be above that box. So we might not get a break at all, and we might not get a bullish harmonic. So just to say that the sheet is down 99%. Anything to do with the live update data, it won't be loading because of the MyFXbook is under maintenance. So you can still use the QDB scores, but there's no sentiment, right? So see the day shift is 0. So you're not going to get any bias from the sentiment, but you can look at the technicals, and the daily pivots and things. We're above the daily pivot on these and the weekly pivots and things. So, our robot as well, just a quick update, is that we're completely flat. And the reason for it being completely flat is that we've hit TP or SL. We haven't had any trades triggered because of the sentiment. All right, so completely flat. We have had a negative week from last Wednesday, but that's partly, well, probably you could say mostly because of the error that we had on the code, and it was to do with the match, which is something I had never come across before. But there was a formula here. That bit here, that was wrong. All right, so it was actually referring to that cell, BP 68, which I'm not sure why, but it was triggering dollar yen when it shouldn't have. But now it's fixed. So once the sheet comes back, the API loads, then we'll be getting our signals back again. So currently flat, and the robot's now got a condition that the failure rate has to be a bit higher. We were at 50%, it now needs to be at 70%, and also we've decreased the stop loss distance as well because we had quite wide stops. So you can see how things are updating, but there's just no sentiment. So you can still use your sheet, but it's not as powerful as it should be because of this. Okay, so trade safely, and I'll speak to you guys soon.